Hello everyone, this is Max. You are watching EquityMatch online live pitch event. Today we have number 121 pitch events. We're very happy. And we celebrate 121 with 4 great funders coming from Europe, Africa and Australia. And one absolutely great investor guest coming from Riyadh, but actually born in Spain. Thank you so much, Guy, for coming today. I can't wait to start. Let me start introducing Xavier before our investor guest and after moving to our funders. Xavier Sanchez Marco. Xavier Sanchez Marco is a technology entrepreneur, investor, cross-board advisor with over 18 years of hands-on experience building, scaling, and investing in startups. He has invested in more than 35 technology companies and was an early-stage investor in Globo. Xavier is the co-founder of Unibon, a fintech platform for the property management sector that was recently acquired by European Group and has been actively involved in multiple fundraising, growth, and exit process across Europe and the Middle East. After more than a decade operating internally across 50-plus countries, he is now based in Riyadh, where he works closely with founders, corporates, family offices, and government stakeholders to help international technology companies enter and scale in Saudi Arabia, aligned with Vision 2030. Xavier focus on venture with real industry application in areas such as energy, sustainability, fintech, and enterprise technology. He brings a pragmatic, execution-driven perspective to funders, grounded in what actually works in the market and not in theory. Xavier, thank you so much for coming. And if you want to give a short introduction to yourself before we move to funders.
Yeah, thank you so much, Max, for the intro and for the opportunity to be here and to meet these wonderful funders. As you mentioned, I'm a tech entrepreneur and business angel. So luckily, I say that I have the opportunity to wear both hats, to understand, whatever I sit in front of an entrepreneur, to understand the person who's going through the vision, and to translate into an investment thesis, let's say, I have been investing in startups since almost 12 years ago, always very early stage companies, usually first round, second round maximum. It's been already almost 40 different companies, sector agnostic, except for health tech, and biotech, which I don't understand. At least I need to understand what's going on. And I'm always there, with the founders, to help them out throughout the whole process and, networking, trying to open doors as well. And as you mentioned, we moved here to Riyadh a couple of years ago, trying to, take advantage of the opportunities happening here in the Kingdom of Saudi Arabia. And as I always say, talking to a new entrepreneur is always a new door, a new window, a new opportunity to learn, at least to learn about a sector, because, a startup, it's equivalent to innovation. So happy to be here and to add any value that I can. So thank you so much.
Thanks to you, Xavier, for bringing us your wealth of knowledge, experience. And you had a very successful exit as well. So maybe we can talk in the end before we leave. Some suggestions to founders, how to find the right actual investors, yes, give them support. Let's move to our founders. And Sebastian Brackmeyer, Saya Faraji, Festus Amoya, and Matthias Slabik. Let me start with Sebastian Brackmeyer. Sebastian Brackmeyer is a founder of Aeromont FlexCo. Aeromont is the world's first operator-independent, AI-driven onboard service platform for airlines and railways. It enables passengers to order food, drinks, duty-free items, digital content, and pre-orders in real time using their own smartphone, online and offline, and with automatic background payment. I leave you to go after me, Sebastian, with more detail. Let me finish with the round. Your headquarters in Austria. Sector is SaaS, B2B, mobility and transport, travel tech, e-commerce, and customer experience. You are in a C stage and asking for 1 million in USD. Please, it's up to you now.
Many thanks for the invitation, Mr. Milano. My name is Sebastian. I'm based here in Austria, very close to Vienna. And I'm coming from the business aviation sector, having 13 years of experience and having a technical background in aviation, mainly in compliance and safety monitoring management, technical aircraft inspections, and also design and certification to modification of aircraft, and also like complex technical project management. And I'm now more than happy to guide you through our innovative project and to show you more about our organization. So before switching now to the next slide, I would like to take you on a short journey together with me. Let's imagine we're traveling from A to B, and let's say for this we're using 3 airlines. So let's imagine from Vienna to Canada, we're using maybe 1 low-cost operator, 1 major airline, and maybe also 1 railway carrier. So this is the point-to-point traffic, what we see today more and more. And this situation leads us to the fact that each operator across this journey is having their own way and method how to offer an onboard service to us. The one having an old-style paper magazine, the next one having a QR code, and so on. And basically, this complexity and inconsistency for passenger leads to the problem that we finally have about only 1 out of 5 passengers willing to pay for an onboard service. So next time you sit in an aircraft, look around how many passengers are willing to pay like 4 euros for a Coke or for a coffee or whatever. So we do have a market size for onboard services in place, but we are actually just picking up about 20% of the passengers, leaving a huge space available for increasing the market size. So what we are doing now, we are redefining the level of onboard services. We are setting a new standard, you can say. And by this, I would always like to give a short comparison. In December, I was in Istanbul. Last week, I was in Malta. Yesterday, I was in Paris. And you know what? I get off the airport, I open up the Uber app, and I order my Uber always with the same 3 clicks, automatic payment in the background, as simple as that. And our mission is to achieve the same level of simplicity for interacting with onboard services in the commercial travel sector. Having 1 app, 1 user account, 1 credit card in the background, and you order your Coke or your sandwich during a flight or during a train ride the same way as you order something on Amazon or as you're ordering an Uber. So on the long term, this is what you can see, what is the big vision. On a short term, what is the biggest asset is ancillary revenues. On a midterm, the biggest asset is data for optimizing onboard services and reducing food waste by applying AI and automatically analyzing consumer behavior. And on the long term, the biggest asset is what you can see here, data. Using data of user profiles around their journey in order to optimize the overall travel routine of an individual passenger. The system is quite simple. We're just working with an offline Wi-Fi inside the cabin. We're basically enabling a real-time communication between an individual passenger and the cabin crew. So, of course, we also adapt to all the different cabin classes that we have in place. So the only difference is like for an economy class, the Coke would be at charge, where in the first class or business class, it would be free of charge. So we're just talking about real-time order system inside your cabin. For passenger, the process is pretty much forward, so as simple as ordering something on Amazon. You open up the mobile app, you browse through the menu, you select your product of intention, and you select the order. And in the same moment, the cabin crew receives the order on their tablet, and they will deliver it to you, and the payment goes automatically in the background. So we also avoid language barriers, for example. Also, any additional functions that could be of interest during a journey can be covered by our system. So talking about communication, accepting different payment methods, in-flight entertainment streaming, requests for medical services, and more. Showing some interesting numbers supporting our case is that about 85% of all people worldwide own a smartphone, and about 60% of them are utilizing e-commerce systems or mobile payments. And now we have a dark number, which is not shown here, which is that about minimum 15% of people are negatively influenced when using mobile payments, which means that we have 15% of people suddenly purchasing one and the same item which they didn't purchase before by using cash or credit card. So by applying this business case, for example, on a big low-cost carrier like Ryanair in that case, this is just like for a sample calculation, this could enable like up to plus 25 million euros a year on profit just for onboard services. So in such case, the return on investment equipping the full fleet with our system would be as less as 6 to 7 months only. This is the same sample calculation for national railway carrier here in Austria, but this is not that much of interest. We earn our money basically for B2B SaaS, software as a service. So we take software fees per individual aircraft tail number or by train unit. And we also have some additional modular packages available, which is optional in-flight entertainment, optionally providing also a hardware, and also having an option like of a standardized pre-order system, for example. Talking about the market size, without going into those numbers here too much, the one thing essential to mention is that I told you that the current market size, which is about $20 billion a year, is actually generated just by about 1 out of 5 passengers, so by 20%, which means that the total available market could be actually 5 times. And if we deduct now the number of users not having a smartphone and not using e-commerce systems, this is how we come to those numbers as shown on this current slide. We started basically the initial analysis of this business case was performed in my university master's thesis in 2022, and then having worked with some national funding programs, having formed a team, got a high-level advisory board, having a high-level advisory board member on board, and then officially incorporated the company. And just like in the beginning of last year, we had the first software mockup available, and just now we have the very first working prototype and we run the first system tests. Unlike our competitors, our system features an automatic authentication of each passenger and also includes automatic payment in the background. So we understand that it must be as seamless as possible in order to attract the passenger to buy an onboard service. And for this, we also have an international patent application in place. Our team includes experts from aviation business, software development, and complex IT systems, and we're supported by a high-level advisory board of former airline managers. We are currently in the seed stage. As I said, we have just completed the first working prototype, and we'll run the first real environment system tests indeed on Thursday this week inside an aircraft cabin. And we're now seeking for 800,000 euros or like $1 million. And this capital we would take for go-to-market, for running the very first system installations in the airline and railway industry, and for performing marketing. Thank you very much, and available now for any questions.
Thank you so much, Sebastian. Xavier, I leave everything to you.
Perfect, Sebastian. Thank you so much. For the pitch. It's a really ambitious project, and let me ask you several questions. It seems that you co-founded the company like 3-4 years ago. How much capital have you raised so far? How many out of all the employees or people that I saw on one of the last slides? How many of them are full-time employees at the moment?
So basically, the full-time employee is like Dominic, my co-founder, and me only. The others are like supporting us partially. I'm talking about capital which we have raised so far. If we are really talking about cash, direct cash only, we're talking about 45,000 euros, which got out of my own pocket, and about 30,000 euros of business angel investments. And then we had some additional 45,000 euros of awards and of national funding programs. So like total cash investment to date was like 110,000 euros.
Okay, and what is your role in this other company, Triple C Aviation? You are working on that company in parallel, I guess, or?
This is true, yeah. Since nobody is paying me yet, I still need to earn money somehow. So I'm still involved in some aircraft projects where I'm doing aircraft inspections. I'm a qualified aircraft inspector. Yeah, exactly. So this is my role. But okay. Since I'm working 7 days a week, I'm full-time on Aeromont.
Yeah, I can imagine. And you mentioned in one of the slides that you already have one existing customer. Which customer is it? If you can mention it or not, whatever. Which sector and what is the commercial integration model with them, for example?
Yeah, maybe that was a misunderstanding. There is no fixed customer yet. We are in discussion with about 20 operators who are all interested. And we're now pushing forward that we get the first official POC with any of those operators. For example, there's a railway organization who is quite interested. And then we expect once we completed the first POC, that it's then getting faster. We have been already on several expos, aviation and rail business, and got really great feedback, even from completely different cultures on the other side of the world, for example, outside of Japan and so on.
Okay, perfect. And I see that your other competitors are basically, focusing on giving a solution to the airline, while you're mostly focused on giving a solution for the passenger, no? Why do you? Yes.
Exactly. Yeah. So this is exactly what the competitors are doing. Is exactly what leads to the case that we have today. Having so many fragmented solutions. So I know business travelers, frequent travelers, they have like 12 different mobile apps on the mobile phone from different airlines. Any app can do something different user accounts, different passwords, and so on. So we would like to set a new standard basically. So we're designed to be a white label light solution. So we are not competing with existing solutions. So still the existing solutions can be run in parallel with our system. With our system, we just would like to address those few passengers who today nobody is addressing. This is what we are doing. We're picking up this additional money for the operators.
Okay, and out of the 800,000 that you are raising, most of the money is being allocated, for product, development. When do you think you're gonna be able to have an MVP?
Basically, the MVP stage, we can say we are right now with the prototype, because it's at the first working prototype we have now is actually far beyond the prototype already. If you check the team, for example, Mr. Markus Wenzel is a highly experienced backend developer, and he has already run another startup project successfully. So actually, we are already at the MVP stage now. We just would like to run the first POC. And then, like, I would say it's like an additional 6 months to have a fully market-ready product only. So like the money is not the majority anymore for product development, but like just to cover the rest of the product development and then for go-to-market and marketing.
And what do you think these 25 potential customers are holding them, not from going forward, and signing an agreement with you, for example? And
to be honest, the problem we have is the typical chicken and egg problem. We get great feedback even outside of countries on the other side of the world, but then they say, okay, we would like first to see how is it running in Europe, and then we come on board. And the same is it within Europe, that they say, okay, this is really attractive, but like you're too early, and we would like to come on board once you have other operators. So we need now these first operators. Those could be really small operators, and then the others would join.
Yeah. Have you given it a thought, maybe integrating your solution into their entertainment solution that they already have in place, for example, which might be easier for them? You can have a faster, adoption as well.
I would not see the use case about the entertainment system. So I think you're talking like about the screens, for example, the in-seat screens that we have. They should be removed quite soon. They're expensive. They're heavy in weight. You need additional electrical connections in the aircraft. So this is really inefficient in aviation. So there's more now the trend coming, BYD, bring your own device on board. And this is what we are basically supporting. And when talking about integrating into existing solutions, we anyway have no problem. Like if there is like already any hardware, or like if there is any software system in place to integrate our solution into it, like it should be as seamless as possible for the operator. So we'll work a lot with APIs and like with standardized interfaces.
Okay, so my suggestion, last I would say, suggestion on my side, I think to take an analysis on this opportunity, and integrating. If you said, the trend is going to be, moving into a standalone mobile app, for example, try to integrate yourselves into this app, because it's going to be much easier for you, because you're not somehow disrupting their model, and how they approach, the customers and so on, and your potential growth is going to be much faster, no?
Yeah, I understand. Thank you for the feedback. Thank you.
Thank you, and all the best.
Thank you very much.
Thank you. Thank you so much, Sebastian. Thank you so much. I'll move it to our second founder. Shahryar Faraji, founder and CEO, Quad Core PTI Ltd. The leading platform replacing paper receipts with a sustainable, smart, low-cost, and privacy-protected e-receipt solution. That quarter is Melbourne, Australia. Sector fintech SaaS Camentech. Investment runs a pre-series round of 1 million in Australian dollars. Shahryar, please, it's all about you now.
Hi everyone, my name is Shahryar Faraji, and I'm founder and CEO of One Receipt from Melbourne, Australia. I'm going to take you guys into a journey. We are a team of engineers passionate about the environment, and we are on a mission to replace wasteful paper receipt with a unique e-receipt platform. Unlike others, with One Receipt, shoppers don't need to reveal any personal details with the retailers. Only they just need to scan a unique barcode or share the unique RShield ID at the point of sale, and they get their e-receipt in the app. Simple as that. Recently, or end of 2024, we launched our first chain supermarket with one of the biggest in Australia, Coles, and it's now live across all the stores. Also, we introduced our groundbreaking last year, our e-receipt protocol, which is accessible across 90% of the retailers within the ecosystem. And also, as part of the R-Shield, we also introduced it into our second chain stores in Australia, Officeworks, where you just walk in, give your R-Shield ID, and you get your receipt. This is a standard e-receipt protocol. We also been finalists 2 times within City of Melbourne Awards, along iAwards within Victoria under sustainability category. And also been in the face of 9 News broadcast nationally as a fight to the cause of replacing paper receipt with the e-receipt platform. Also, we started last year our activation within shopping centers to broaden our reach within our shoppers acquisition. This is one of them. This is another shopping centers within Australia. And also these are our growing list of channel partners from different point of sale, from to resellers, as well as to also chain organizations like Coles and Officeworks. And our ask is 1 million AUD for a 200% equity, which is going to be using to be scaling our shopper base in Australia, leveraging a Coles and Officeworks win, plus execute a Singapore launch strategy that we have a ambition target of 20 million shopper base by 2030. I'm going to leave you guys with a short video.
Shocking how a single receipt can cause so much damage. In the pulse of commerce, a simple transaction unfolds. A customer, like millions around the globe, accepts the receipt without a second thought. But with each paper receipt comes a link in a chain of destruction. Trees, the guardians of our planet, fall victim to our demand for convenience, setting off a chain reaction of environmental degradation. Waterways, once teeming with life, bear the burden of our paper addiction, triggering a chain effect of pollution that poisons ecosystems downstream. The air we breathe becomes heavy with the byproducts of industry, igniting a chain reaction of atmospheric pollution that envelops communities far and wide, all from a single receipt. But amidst the links of destruction, there is an opportunity to break the chain. At One Receipt, we proudly stand as disruptors of the status quo. Yet, the truth remains, we cannot shatter these chains alone. So, please join us.
And that's it. Thank you for your time.
Thank you so much, Adrian. Thank you. Xavier,
Great.
it's all you.
Yes. Okay, Sharia, thank you so much for the presentation. First of all, before getting into the project, let me know a little bit about yourself, because as far as I understand, you have like a software factory, venture builder, something like that, no? So this is one project that is coming out of this, let's say, factory, for example.
Yeah. So my background is I graduated from computer science from RMIT University. So I studied computer science, and then this is I started One Receipt back in second year of uni, and then I just started that. We got my initial funding from an accelerator program from RMIT, pre-seed funding, and then that's how everything kicked off. I never went to corporate. This was my first venture, and then so on.
Okay. So you've been working on the project for some time already.
Yeah, so basically started this in 2017, went into an accelerator program in 2018, and then registered as an Australian company in 2019. And since then, we were piloting with different small retailers, and partnered with point of sales, and then which reached into our first enterprise deal in 2024 with Coles, and then moving forward, launching our digital receipt protocol, which is R-Shield, and then second enterprise integration and so on.
Okay, and what made you get into this business? Let's say, you saw an opportunity, or something happened to you personally. Let's say, and you said, I think it was just maybe playing around, while you were at university, like a project?
No.
Or how was it?
Sure. So how I basically started One Receipt is that seeing the wasteful paper receipts going into the waste at the checkout was actually what made me think about a solution to come up with an alternative. Also, the giving out your personal email and phone numbers, but then leads into general junk promotion. That was also a way that how we could leverage our unique phone to be able to get the receipt within our phone without exchanging any information or just scanning a paper receipt. That's basically the motive behind One Receipt.
Okay, and what is the business model? Because I wasn't able, to find out.
Sure, yeah. So the business model, we charge per transaction. So all on our website. So we charge 5 cents to 9 cents per digital receipt, per one receipt transaction, and then that's it. We don't charge anything else, and that's half the cost of paper receipt in our research that we did. Paper receipt costs 10 to 18 cents per receipt roll for a retailer. For us, it's 5 cents to 9 cents, and that's it. There's no any other extra cost, no rental fee for the scanner, and then nothing else. So yeah.
And who pays for that? The retailer or the customer?
Retailer.
Okay.
So our customers are retailer, and then for the shoppers who download the One Receipt application to start using it, that's completely free. So that's basically a shopper's currently they download the application, they go into a One Receipt stores or a call stores or office work, and then they scan the barcode to get the receipt. What last year we are really proud of is R-Shield, where you really don't need to go to any One Receipt enabled store. You go to any stores that offer email receipt, but instead of sharing your personal email, you give your R-Shield email, and that's it. You get your receipt in the app, private, secure, while in the back end will basically onboard the retailer to join One Receipt as our scan and go partner.
Okay. So, and how many retailers are you working with, and what's the customer base?
So basically, our small businesses network is around 20 network within Australia, but two of the biggest companies, Coles, which is live across 800 sites, and also Office Work, which is live across 1,000 sites. Those are our biggest one. These are our enterprise integration that we're really proud of. So yeah.
And in terms of end customers, how many are using the app?
The app we have under 10,000 right now, and the reason for that is that until the last financial year, which is 30th of June 2025, is that we were heavily focused on R&D, and then we're wanting to grow our partner ecosystem, make the app robust, and then that's why we haven't we haven't much invested money in marketing, and the gross marketing started from 1st of July this year, and then that's why we are doing activation at the shopping centers, partner with shopping center to grow. And our projection by the end of this year is targeting 50,000 shoppers to start.
Okay. So it's clear that you're adding value to the retailer because they're saving money by the use of your technology. In the case of the shopper, there will be people who are very concerned about sustainability, others who don't care, but is there any incentive for them, to go through the whole process? Are you integrating some other solutions like loyalty programs or promos or whatever, to push them get into the app, and to use it more frequently?
Yeah. So for shoppers, they have endless benefit that they get from One Receipt. First, as you said, sustainability. Second is privacy. They don't share any information with the retailer. Their data belong to their data. That's what we give them. Third, it's basically they will access what would happen, their statistic. So we have a My Stat within One Receipt page. So they see the annual spending, their monthly, weekly, the transaction history, as well as be able to see how much, like for example, they per receipt, how much tax they spend, and they link to the accounting software. We've worked with the government agency. So in Australia, it's a valid tax invoice by the Australian taxation office. They could keep it for long term, and then also they could we have the reward functionality as well. They could be integrated with top 10 reward loyalty, so they could link up into the app as well. So basically, the One Receipt application will be, first of all, centralized for all the receipt and also for shopping tracking as well and budgeting.
Okay. That sounds very interesting, because at the end you're going to have a lot of data, and you can, from giving loans to cash to shoppers, for example, or becoming a payment gateway, for some of the things. No, so it's quite interesting.
And also,
yeah, go ahead.
Just one thing I wanted to add also for the benefit is that shoppers earn points as well. As they get receipt, we give points as well, so that also incentivizes as well.
Okay. And out of the 1 million round, how much do you have committed already?
So we haven't committed on that 1 million, but to date we raised 400,000. So that's including pre-seed funding from RMIT, which is 25,000. We received 100,000 last year from Commonwealth Bank of Australia, and also around 290,000 from as a government grant as well.
Okay. One last question. What co-founders do you have? What kind of backgrounds do they have? Are they tech as well? They're product, marketing?
So the team right now, so basically the cap table is really clean. So 60% owned by me and 20% by two other shareholders. And their background is within the business development, engineering, as well as management. And also my other team as well, I got 12 people in terms of product design, software development, marketing. They all on casual basis. So basically keeping the burn rate also at minimum possible.
Okay, great. So it looks very promising, especially because of the opportunities that can open up, in the business model, and adding so many different functionalities. So congratulations for everything.
Thank you.
Thank you,
Shaya. Thank you so much, Xavier. Let me move to our third founder. Here we go. Festus Amoya, co-founder of FigTech, MyFig Limited. FigTech is also an insurtech with an automated platform, MyFig, that harnesses time-saving processes, allowing fast, seamless access to information across life insurance company and products. A single centralized system for the customer, side-by-side comparison of life insurance products. Headquarters is Ghana, sector insurance, investment around pre-seed. The ask is between 200 and 500K. Thank you so much, Festus. Please, it's up to you now. Unmute yourself, please.
Sorry. Hello, everyone, and wherever you find yourself, good to have you and to talk about our company. And so, yes, FigTech is a company formed in Ghana to focus on creating a simple life for those who want to buy life insurance in the country and perhaps extend to Africa. So there are three major things that tend to take people away from buying life insurance. Customers struggle to understand coverage options and benefits. There's also a lot of distrust or mistrust when it comes to life insurance, because there are hidden terms and other terms and conditions that people tend not to get sight of. And then also complexity. Policies are often not tailored to individual needs and life stages. And then also income. 63% of individuals feel unprepared when they want to buy life insurance, and nearly 40% will delay purchasing life insurance because of the complexity and lack of guidance. For us, our approach towards the market and helping people to be able to acquire life insurance is to create a mechanism to compare life insurance from different companies. Almost the products from different companies are similar, but obviously users find it difficult to identify which ones suit their need, their budget, as well as their preference. And then also help them to understand the coverage in a very simple and clear language, and then also help them to be able to personalize recommendations when it comes to buying life insurance based on their needs and their budgets. The market is right in Ghana and in Africa. McKinsey estimates the market size in Africa when it comes to life insurance about 65 billion, and across Africa the penetration rate is lower compared to other geographies like North America and Europe. And the addressable market in Ghana is about 66 billion, and we are looking at getting about 20% of this market share in the next 5 years. The market demand continues to grow when it comes to digital life insurance platform, and we are looking at a growth of about 12.8%. Like I said, the market potential is about 6 billion. The current market sits around 400 million or more. And in Ghana, in particular, where we started our activities, the active workforce is over 11 million. We are looking at a population of between 25 to 60 years. And we hope and believe that this market segment is quite big enough to be able to help our growth as a company. Our features is where we bring different life insurance companies on the same platform. So we aggregate, we simplify the language around how you can compare and select the right insurance coverage for you. And then we use our advanced algorithm and AI to be able to match you with the right policy as well. And we are also providing the users with education to help them navigate through the complexity around life insurance. Our traction, we have our apps are live on both iOS and Android, and we have over 1,000 users on the platform. We are pre-revenue, and our revenue model is basically getting commission from the life insurance companies as we sell our product. The revenue model is such that in the first year, we get 5 to 20% of the premium that every user pays from the insurance company, and then it decreases by reducing balance over a period of 5 years. We have partnerships with various insurance companies that currently we are onboarding on the platform. Our main competition is with individual and tiered agents who control about 61%, but they are not digitized and continue to impact on users' accessibility to insurance. Our team is myself and a co-founder who is the CTO who has built the entire technology. We have a board of advisors who continue to guide us in our journey. We are looking to raise about 500,000 as a pre-seed to expand our reach, enhance our technology, and empower more people to have confidence in life insurance. Thank you.
Yep. Thank you so much, Festus. Thank you. Xavier.
Festus, congratulations, and nice to see someone from Ghana. That doesn't happen every day, so very happy to see you around.
Thank you.
I've seen in your LinkedIn that you have another, let's say, full-time job. Is that right?
Yes, I do. I do have a full-time job, but basically this is something that I'm quite interested in. I think the full-time job came by accident, but then my faith is something that I continue to work on, both my partner and I.
Okay, and what pushed you to become an entrepreneur? And this with this such a challenging and difficult project, for example.
So it's my passion to help people plan for the future. We live in a world where often than not, people are not really prepared when it comes to taking care of their children's education and taking care of their loved ones when something happens. In like I mentioned, in Africa, the penetration of life insurance is quite low. But I've seen life insurance change lives as well. It's created generational wealth and etc. And so if we can help people to navigate through that process of planning for the future for their loved ones, it will help us to improve the safety net that people have. People, get accidents, they get out of job, and sometimes they don't have no fallback plan. And life insurance helps them to be able to achieve that. And that, for me, is something that I believe we can help demystify and get people to sign up to life insurance policies.
Okay, perfect. And to understand a little bit, with a similar market or sector in Ghana, in banking, what percentage of the population are using digital banking or a neobank, for example, versus a traditional bank that they have to go physically to a branch?
I think I don't have the exact statistics, but I think that is changing. So we have in Ghana we have what we call the mobile money technology, and over the last 3 years, I must say that mobile money has actually surpassed traditional banking, if you will say. So people are able to send money peer to peer from their mobile phone to another person to transact business. So that is something that initially when it started, people didn't believe it's going to help, it's going to work. But now, most every individual, we have 30 million population, um, mobile money penetration is over 100%, if I say, because people use double or triple devices, and each of them will contain a mobile money account. And so that transaction that has been created in mobile money is more than what is happening in the banking sector altogether. So digital technology is picking up. We don't have nano banking, but people are really using mobile money transactions everywhere you go. So people are able to actually transact business or transfer money from their bank account
Yeah.
into their mobile money account and use it to do other transactions, shopping, transferring it to loved ones. So our platform allows you to be able to pay for your life insurance premium using your mobile money account without
Okay.
even using the traditional banking. Even though we have that platform, we also created an avenue for you to use your card if you want to use. But we believe the mobile money is what will help people to really uptake this product.
Okay. No, so because that's I was asking because that's the kind of signal that will give you a hint on the market readiness and the customer readiness to adopt, your technology and to be able to buy, I would say, a sophisticated product. And one thing is sending money peer to peer, and a different thing is doing more complex transactions, like buying shares or whatever, something which can assimilate closer to buying an insurance. And so that's something that you should be taking a look at, for example, no? And
Sure.
you mentioned that you have acquired 1,000 customers, but you are still pre-revenue. So what's preventing you from monetizing these customers?
We are monetizing. So you see so currently we have one life insurance company on our platform with about 3 products, and we are still onboarding. Even by the 16th of February, we are going to onboard the largest market leader in life insurance on our platform with about 4 products. Because the whole concept is to be able to compare different products, and therefore having one product alone is not, or one company alone is not enough. So bringing on board additional companies will help us to really monetize, and that is something we've worked to. The other, what we is challenging also is that most of these insurance companies, as you may have read, are legacy companies. Trying to adopt new technologies it takes a bit of time. And now we Star Life, which is the main company we had first, was the third largest. Now we are bringing on board the market leader, and definitely that will create a lot of convention for us because people will begin to believe in what we are doing, and then be able to sign up for different products.
Okay, and how do you plan to acquire customers?
So our customer acquisition is predominantly 2 ways. So we're using digital platforms to engage in different ways to be able to tell. So we're creating awareness about life insurance as a first step because most people don't understand it. Most people have some misconception. So we try to break it down to let people understand why they need life insurance and the relevance and importance of it. Secondly, the existing customers of the insurance companies we are onboarding also become part of our customers pool because through our platform they are able to get access to their existing policies and be able to also buy new policies if they want to do that. So that is how we are working.
Okay, so Festus, let me give you my humble advice because I've seen similar models, in Europe, for example, where the market is more mature. Let's say, I've seen models like this for the last 5 or 10 years. And I have seen, a lot of B2C companies on the mortgage insurance and so on, that they were born as a B2C, and they realized after 2-3 years that acquiring customers is so expensive that it was a very tough, market, and most of them, or the ones who could survive, they pivoted into a B2B SaaS. Okay, B2B SaaS, in order to integrate with the insurance companies and to license their technology for them to digitize all their processes. No, you said, usually insurance companies are very legacy, old-fashioned companies, and they need to digitize themselves. No, so my recommendation would be, take a look, maybe take a step back, and start talking to them and helping them out, using your technology for them, because at the end they are already in contact with the customers. They have a large customer base, so the customer acquisition is going to be close to zero, and you're going to be able to start monetizing from minute number one. No, so in that way you're going to become like a software provider to the insurance companies. You have zero marketing costs, and you're going to start monetizing very, very soon. No, otherwise, the B2C is very, very tough.
Thank you so much for the feedback. We will look into that and see how we can also transition.
Okay, thank you, and all the best.
Right.
Thank you, Festus. Thank you, Xavier. So we are moving to our last funder as we're heading to the end. Matthias Slabing, CEO and founder of QueenFactum BV. QueenFactum is a technology company that helps organizations turn complex regulatory and supply chain data into clear, actionable intelligence. They specialize in building digital framework that connect products, processes, and partners across the value chain with a strong focus on traceability, compliance, and transparency. The headquarters is Bruges, Belgium. Sector is SaaS technology. The investment round is C with an ask of 1 million in USD. Matthias, the rest is all yours.
Thank you. Well, thank you everybody for waiting for me. I'm based in Bruges, and I'm probably the oldest person here to pitch. I'm 58. So I had a previous career in our family business for 25 years. I was selling textile products, and more particularly church vestments and home linens. And then in 2018, I left the company, but already had the idea of what was going to become QueenFactum. And so here I am. QueenFactum is a SaaS that allows companies to create digital product passports and use them to unlock value. So the problem is that digital product passports will become mandatory in Europe, and in the textile sector, in furniture, and some other sectors as well. But in furniture and textile especially, 92% of the companies involved are SMEs, and they are not ready. They don't have the data, or it's probably scattered in Excel files or in legacy ERP systems. So what do? They procrastinate. They wait and say, oh, okay, we still have time. It's only in 27 that it will become mandatory, so they wait for it. And in the meantime, they lose out on beautiful opportunities. Well, we have built a solution with them specifically for SMEs, and it's built in such a way that you can use it for self-service, self-onboarding. So there's a very low friction. You can upload all the data through Excel or CSV files, but also with connectors to some very popular ERP systems. And of course, if you use it now, it's all about value. It's not yet mandatory. So our product is threefold. We've got the digital carriers, as they're called. So that's QR codes and RFIDs. Then you've got the platform where the companies can create and manage their DPPs, digital passports. And then there's the front end that consumers will see once they scan the DPPs. And of course, that page can be customized. Well, to estimate the market, what I've done here is to have a look at furniture and textile. According to Eurotex, in Europe, there are 90,000 textile companies. And as I said, 92% of which are SMEs. On average, they produce 440,000 items per year. And we charge a small fee per DPP generated. For textiles, it will be around 1.8 euro cents. And in furniture, that will be 10 euro cents because the value of a furniture piece is higher. So combine the two together and you've got a market of 79 billion euros per year by the year 2030. And we expect to get 5 million euros worth of business by then. Currently, the brands, of course, don't have to be compliant yet. So the ones who do it are early adopters who see value in using DPPs. But the true breakthrough will come in 27 when it will become mandatory. And then once that wave of first adoption will be done, then we anticipate the adoption of the more value-based applications. At this moment, we've got 27 companies using our platform. Already, we've created more than 420,000 DPPs, unique DPPs. That is an average of 15,600 per company, and that brings us above 50,000 euros in ARR. So that's good. Now, the price structure is quite simple. You pay per usage, so you pay per DPP. We've got 2 entry levels for SMEs. So you can see the ones that would do up to 50 models per month or 2,000 items. Then you go up to 500 SKUs or models per month or 12,500. But most companies are above that. Typically, they will do a couple of 100,000 per year, and then we negotiate the price. This is the competitive landscape. Most companies still either use ERP systems or expensive solutions. We are the ones who bring a simple solution for small and medium enterprises. We are seeking 1 million euros, of which 200,000 is already soft committed, and we will use that to develop further our solution to create connectors, but mainly to prepare sales, because as I said, in 2027, it will become mandatory, and then we have to be ready with a sales team to answer all the requests. Our team right now is composed of 4 people, full-time employed. My co-founder, Christoph, has experience in fintech, and he also did a successful exit. And then we've got 2 people on the payroll. And Christoph and I still hold all the shares, so it's 50-50. We're bootstrapped, and we founded a company in 2020. So I guess I just made it within 5 minutes, which is, to my standards, a good record. Okay.
Thank you. Please.
Thank you. Thank you, Matthias, and congratulations, and to be so precise. Okay. I don't know if you're Belgian or Swiss. Eh? Okay.
Belgium.
So I read that you started the company back in 2020. Is that right?
Correct.
And
yeah.
what have you done since then? I guess many things, but it's a long period. Let's say. No?
Yeah.
So,
well, first of all, we validated the value proposition. Our initial idea was to bring transparency to the customer, so that the customer, when he knows how a product is made, how, where, when, and by whom, that the perceived value would increase and they would be willing to pay a premium for sustainable products. That was the original idea, which we still build upon. And then we've built, of course, the solution, because to do that, it takes investment. And then we had our first paying customer in 2022. And ever since, we've been slowly growing. Yeah.
Okay. And have you raised money since then?
Nope. We are still, founder funded. Fortunately, Christoph and I have had a previous career, and we have some money saved that
savings. Okay.
Savings.
But you have to take care of the family, because I know the feeling, when you get home and you have your wife or whoever, saying, "Come on, what's going on?"
Yeah, you know what? We've gone to the bank. I haven't mentioned that, but with KBC, we've got they can give us a leveraged loan for 40% of what we have in capital, but they require a mortgage, and that is out of bounds. My wife does not want me to mortgage her house.
Exactly. Yeah. And you say that you are working already with 27 companies.
Yes.
How was the process of acquisition? How do you do it? You did it yourself, I guess, or Christoph. But how did it go?
No,
What's the
up
cost of
until now,
acquisition?
it's been outreach. Just I've made a target list and I started calling companies, visiting them. However, now in the last month, we had 2 inbound leads because people started to prepare. But up until now, it was just hard work, calling them up, sending emails, doing a couple of trade fairs as well. But what we want to do with the money is set up a funnel, an inbound funnel, and increase the sales cycle.
Yeah. Okay. And the law was passed when? How many years ago?
Sorry, the what?
The law, the regulation, let's say.
Oh, the law. The ESPR was confirmed in the parliament in 2024. The standards for DPPs are being published now, the first quarter of 26, and then textiles, the delegated acts will be published in 27, and then there's an 18 months grace period that companies have to get in order to get compliant. So that's when we really anticipate the boom.
Okay, so that's in the middle of 2028.
Well, and during 28, it's exactly 18 months after the publishment. So depends on when the delegated acts will be published. But in the course of 28, that's when the acts will fall. If you're not complying, you cannot put any product on the market anymore.
Okay. And that includes not only large companies, but also SMEs, right? It's mandatory for everyone.
It's not the company, it's the product. If you want to bring a product, a textile product on the EU market, regardless of who you are, where is it made, it needs a DPP. So that's important.
Okay, so I guess most of the money is, as you said, to set up the sales team. No, I mean, you have to become a sales machine.
Yes, exactly. That's up until now, it was 3 developers and I selling, but of course we can't scale that way. And the whole system is set up to scale very fast. But I want to invest in marketing, LinkedIn ads, webinars, and then have a team ready to quickly onboard. The cycle should be within 2 weeks to 3 months tops between lead and onboard, and being operational with the customer.
Okay, and the customer base or customers are only European companies or anyone exporting to or just the local companies or?
No. Any company that puts a product on the market in the EU has to comply, including the Chinese companies.
Okay.
So the market is much bigger than just the EU, but we're mostly looking at the number of products. For instance, in textiles, that's 35 billion pieces that are put on the market each year. So that's the market for textiles alone. And then there's furniture, and then there's other sectors.
Okay, and now that you have a little bit of extra time before the law is being enforced, are you planning also to integrate with other ERPs, more generalist ERPs that they can act like a sales channel for you, for example?
Yes, it was on my slide. We want to build connectors. For instance, at this moment, we're working on one with Odoo. We have a license agreement with Fashion Partner, that's an ERP, who will use our technology, because we're also white labeling our technology already to other solutions. So it's not going to be just our sales channel, it's going to go through others as well. But again, that involves more development, and we need money to do that, the scaling.
And I was going to ask, have you thought of any other, let's say, secondary business models or features that you can add to the product? Because I mean, the opportunity seems to be very clear. It's there. It's close. The volume is huge. But once you have all the data and all the customer base, blah 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 blah, have you thought of any extra feature?
Yes, well, that's what we call our value-generating applications. For instance, one of our customers is a brand called Filou, and they have children's clothes. Now, as the children grow out of their clothes, they have a program where you can bring them back to the store. You get a voucher, and then they will resell it. For that, they use DPPs, and they found that it's much easier. It's linked to the cashier's system. So that's a typical application that generates extra value, and he pays an extra. So he pays a base fee for the DPPs, and then an extra fee for that feature. So that's upselling.
Okay.
Yeah.
Okay. Congratulations, Matthias. It looks promising. It's 9 o'clock, so I mean 9 o'clock for me. It's 7 for you guys. So, and you are very precise, and Max as well. So depending on himself, we can continue or just keep it here.
Absolutely, please. If you want to ask something more, you do, and after we go to the closing.
Yes. Okay. So I would explore those two ways, as I mentioned. The connectors that you said before. That's a key feature that you can add to and add value, and have faster access to the market, and the secondary business models that you can monetize in a different way. And one last question: you mentioned about the business model of the different segments. You charge the company per year, let's say per DDP per year.
Yes, well, with the biggest companies, what we've done so far is negotiate a minimum. So, for instance, there's one that does 4.5 million pieces per year. Obviously, they wouldn't pay 10 euro cents. So we've negotiated a very low fee, but still, that's 25,000 ARR. And if they go above the 4.5 million pieces, if they do 6 million, they will pay on top of that. But that's the bottom line. We know how much they commit to, and then we charge every month the fraction pro rata. And at the end of the year in December, we look at how many DPPs they've done, and then we can charge extra for that. Well,
Okay. And you say SMEs account for 92% of the market. What's the value? What's the value of these 92% of companies? How much value do they have in the market?
Do you mean to us, the DPP?
No. In general, you say 92% of the companies are SMEs.
Okay.
Out of the whole market.
I must say I haven't found that figure yet. I talked to Eurotex, which is the sector federation in Europe, and they don't disclose that information. And I could, of course, technically go to Dun & Bradstreet and ask for that information, but right now I don't want to spend that money on consultancy. So no, I don't know that figure.
Okay, but still, the number is huge, so the opportunity is quite big. So
Correct.
I said, congratulations.
Thank you.
Thank you.
Thank you, Matthias. Thank you, Xavier. Stay there, because we're bringing everyone back. We are having some technical problem with Festus, but we can't wait, so we need to move forward. Sebastian, you have 10 seconds, maximum 20, to deliver your Festus back. To deliver your elevator pitch to convince Xavier, any investor watching today, why they should invest you, why should you give it money.
Thank you. We definitely have the first mover advantage with our type of product in the commercial travel sector, and you can see also on other commercial products being huge products worldwide that they work perfect way. And there's the demand there from the passenger side, and we have a high-level executive board with needed experience to enter this complex market.
Thank you so much, Sebastian. Shaya, you're muted. You must unmute yourself. I can't hear you. Say again? No? Try now? Okay, meanwhile we fix with Shaya. Festus.
Yeah, thank you for the opportunity. We believe that the issue of life insurance is very critical to managing the safety net for a lot of people in Africa and especially in Ghana. Obviously, we are partnering up with an industry that is there to support and help people to be able to plan for their future. And we look forward to any opportunity or any investor there that is interested in engaging with us to see how we can develop this product further and further to make life better for the insurance industry and consumers. Thank you.
Thank you so much, Festus. Shaya, are you okay now?
Yes. Yeah, sorry about that. Yeah, so One Receipt is a centralized location for your receipt, backed by 6 years of R&D. We've got 12 people onboarded. We got 2 live enterprise integration in the platform, and we have a strong ambition goal of 20 million users by the end of 2030.
Thank you so much, Ariel. Let's close with Matthias.
So, as Javier said, this is a huge market. Quifactum turns these mandatory digital product passports into a scalable business. We will make compliance simple, affordable, and ready to scale. And on top of that, we will create then value applications to upsell and make our market even bigger.
Thank you, Matthias. Xavier, as we are closing, if you want to give any advice to any funders, because also funders are watching today, and of course our own funders today pitching, what if you have any?
Okay. I'm always amazed, and thrilled about, the enthusiasm transmitted by entrepreneurs. Here it's not different. It's exactly the same case. So I'm very happy about that. It doesn't matter, the age. We have seen, entrepreneurs like 10 years ago, the average age was early 20s, very techie guys. Now we see on the other side, we see guys like Matthias or myself, I'm 54. So, it has changed. It has changed completely, So, but the enthusiasm is there, the push, and the vision. So, I really enjoy meeting you all guys, and I'm here to help you out if I can, in the future, And please pursue your dreams and your visions.
Thank you so much, Xavier. As we are closing, everybody wants to get in touch with the funders. You can do directly because you can see we give you directly their email. You can come to us, and we can make a warm introduction to them without any problem. We are not charging any fee when we do any pitch event. So all the money, they just go to our funders and don't go to us. Thank you so much. You can see if you want to come to pitch EquityMatch.co, you can email to pitch@EquityMatch.co, and we are more than pleased to welcome you. And again, thank you so much, Guy, for today. It's been absolutely a pleasure for me. Thank you. Good luck.
Thank you, everyone.
Thank you.
Bye-bye.
Good night.
Bye.
Bye-bye. Bye-bye.
Sharia, go to bed. It's too late in Melbourne.
Too late.
Not late.
Bye.
Bye.
Bye-bye.
Bye.